Good morning, traders. It is 7:31 Chicago time, 8:31 Eastern on Tuesday, the 29th of August, 2017. Thanks for joining me this morning. The reason we're starting this trader bite early today, and you can watch it throughout the day anytime, is because I have an interview with Dale Pinkert at 9 a.m. Eastern. If you're interested in that interview, you can find the link. I retweeted the link to his GoToWebinar in my Twitter, twitter.com/futures trader 71 is where you can find it. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The market is lower this morning on news that North Korea fired off a missile that flew over northern Japan during the overnight session our time. The missile test forced the Japanese authorities to send out a missile warning to civilians in the northern part of the country to take necessary precautions. South Korea decided that it would drop eight bombs out of four F-15K fighter jets as part of a military simulation. And so what we have here in Asia is the escalation of war. And so the Asian markets have been down. As a result, the European markets are down pretty good. The DAX is down 237 points. That represents almost 2% down on the German DAX. The Euro Stoxx 50, which represents Europe, is down 47 points or 1.37%. We see the U.S. indices also down. The U.S. dollar is down 0.5%, trading at 91.675 on the ICE. And then the leader is, of course, gold. Gold jumped to $1328.9, $1,328.90, up 13.6 points or 1%. So it's not really a panic just yet, but the market did sell off and is trading. The S&P 500, which is the benchmark index, is trading at 2431 this morning, below the key support that I discussed yesterday at 2435 and a quarter. That's the key news. The secondary news here in the U.S. as far as the economy is concerned is Hurricane Harvey going through Houston, unprecedented flooding over there. That city is looking for another 2 feet or about 60 centimeters of rain over the next couple of days. I checked in with some friends down there, and they are definitely in a panic a little bit and seeking higher ground, although that's hard to do in Houston. But that's the key news that came through. We need to keep an eye on the news feeds. It's important to have a news feed, in my opinion. Still, the U.S. released President Donald Trump released a statement that all options are on the table, and Japan's Prime Minister is seeking strong action against North Korea, which is under sanctions. And so that's where we are. We need to watch out for that, for news coming out of that action from the countries affected, as this is starting to look pretty ugly. Anyway, so that's that. Let's take a look at yesterday. I'm not going to review yesterday very much, and the reason is that I actually had the wrong data. I had to delete my tick data and reload it, so I was missing some information. So as I mentioned during the session, my my predictions for yesterday were not really accountable or accurate, as I did not do the usual recap I do on Sunday to see what the bigger puzzle is, so we can figure out where the smaller puzzle pieces, the intraday puzzle pieces, might fit. But my expectation overall for yesterday was for a bullish push. I was looking for the market to base and then start to push higher as it was set up to do that. It did not accommodate that. The secondary hypothesis is the same. A drop early down into 24.43 is the area of support that I was looking for. I highlighted it here, 24.43, and then I was looking for the market to bounce and then run up on the close, which is somewhat of what we got yesterday, but we definitely dipped deeper. We started to push through the lows of Friday. And then I discussed the third plan, which I didn't go over in detail, is if it does get through the 24.43, it's likely to test 24.35 next, and then it's likely to push down into the 24.27.75. The overnight low is 24.21 this morning, again on news. And so it looks like the third hypothesis was in control there. Here's what things looked like. This is a chart that has actually the right data. We had a couple days of balance, so we had a big trend day up on Tuesday. We had balance on Wednesday. We had balance on Thursday. We broke higher on Friday with a lower high, and then we fell back into balance. And then so yesterday I expected it to base and then continue higher, 24.57 or so as a target. And so instead it opened and it was a very slow, initially very slow kind of jagged push down. But ultimately the market did test below the prior day's low at 24.40.50. And then it continued lower, 24.38, stopping ahead of that 24.35.50, 35 quarter. So that's where we ended up. We ended up actually rallying a little bit on the close. We have a point of control and a value area that is quite balanced, and it looks pretty good right now. 24.45.50, 46 looks like initial resistance. But we'll see how the market handles it since we are down here. We're in the gap zone from the 22nd of August from last week. We're in that gap zone now from last Tuesday. So today, being that it is news-based, I'm looking for an SOC test or a responsive test. Yes, we are selling off, but I got to tell you, I'm not very excited about it. It's nice to see the movement, but the basis on which we're selling off is more of it's fear coming into the market that does not have that may not be lasting. In other words, this may be North Korea's last provocation before things start to pick up. So what the market has done is it opened and it dropped right away, recovered, traded sideways, and then it dropped again on the European Open. The European Open is around here, and the market started to sell off, and then it's come all the way back to the point of control, to the upper part of the profile. It looks like it's fairly strong. This looks like a pretty good test, and it looks to me, again, I know I'm sounding bullish in a sell-off, bit of a sell-off here from day to day, but to me, this looks like it is basing and is still likely to continue higher. That's what I'm looking for. The auction was interrupted with this news. Yesterday, we did make a lower low to Friday. Again, let me clean this chart up here a little bit. We did make a lower low to Friday, so here's Friday's low, right? And we made a lower low, lower high to Friday's high. But overall, we're still inside of this balance zone. We still have 24.43 in command up here. We're trading below balance, and we've pushed down again. We've pushed down into in the overnight. We pushed down into 24.21, which 24.21 brings us down into the lows that we were in before. So here's the last time we were down here. This is the big sell-off day on the 17th. The 18th continued lower. So we had a sell-off, and then continuation move. There's the impulse, pullback, continuation move, and then corrective right here. This is a higher low from the low, and then we pushed higher, and then we've gone sideways, and now we are pushing back into this 2-day balance down here, and are holding above that 24.2750. So to me, what is the easier path, or the path of least resistance from here? The path of least resistance, in my opinion, is to respond upwards and start to move back into 24.3550, and then 24.38, and then 24.43. That's what I'm looking for. So what does that look like in classical market profile terms? Here's how things look right now. You can see that we've ping-ponged back and forth for a couple of days. So what we have is this zigzaggy kind of trade. It's like a bigger picture zipper that we're breaking that we're breaking below. Again, the market's trading down here at 24.30, 24.29.75, and it's got some support underneath it. It is likely to test up before it's likely to test down, in my opinion. So we'll see based on the auction process. That's my expectation. So this morning, overall, I'm looking for this to have an open auction out of range. It is tangled up in this profile, this template day. I'm looking for it to base a little bit, and then I'm looking for the impulse to move up, pull back to the opening swing, continue higher to 24.3550, and then chop around here at the MC point of control, push to 24.38 before balancing out for the rest of the session. Okay, that's my hypo 1. I'm looking for bigger moves to the upside. I'm looking for what's called responsive buying in this situation, right? Not initiative. Okay, and then if we base, we have a base, and we see that the market's incapable of pushing lower. How do I do that? Several ways. Just look at I look at a short-term chart, but I also look at Bookmap and see what what is the order flow look like? How is the market printing up and down? How is it printing against the offers versus the bids? How is the buying going versus the selling? And if I see that buying is dominating, I look for an area to lean against, or a pullback area to lean against, and I go ahead and look to enter at the best possible position. And I know every trade every trade outcome is 50-50, but I go ahead and look for the market to support my position, take some contracts off, and then manage the trade as it progresses. Okay, I've covered that a lot. I also have a webinar 5 on my website that covers my approach and execution, so I won't go over that here. But that's my expectation. Okay, so I'm looking for the market to base. Now, if it becomes responsive early, okay, and it doesn't come back to the open, then we're likely to see a mild trend higher and back into balance at 24.43, where you notice yesterday's point of control and the MC point of control are on top of each other. I expect it to go back there. Okay, that's hypo 2. So I'm looking for responsive trend up, and with shallow opportunities to get long. Hypo 3, because of where we're out of balance, if we get a push up, just like in hypo 2, but then it crosses below the open and breaks the opening swing low and starts to move lower, then I'm looking for an initial push higher for a continuation move lower to the overnight low to test down below this balance area that we left behind from last week after the sell-off. So I'm looking for 24.17 or so, and then the market's expected to bounce into the close. That is hypo 3. Okay, I know it's a lot to digest, and it seems like I have plans for wishy-washy. That's not the case. Here I'm looking for what could happen in every direction, and I'm looking for what my targets are going to be, how I'm likely to what I'm going to look for to enter in that direction, and where I'm likely to be wrong. Again, the difference between 2 and 3 is 2 is unable to break lower, and the rotations are higher on the positive side, on the buy side. With 3, what we have is the market becomes responsive, so it looks like 2, but then ends up failing through the opening swing, and is unable to recover. If that happens, it shows that buyers came in early, the books are balanced, the overnight inventory is balanced, overnight inventory short, so we look for that to be balanced, and then what that's likely to do is invite um, fresh selling into the market, and then I'm looking to participate with that selling when it happens. That's hypo 3. Okay, that's all I have for you. Good luck. Watch your risk. Without watching your risk, you're just a gambler. You're not a trader. Okay, good luck. Take care.